what do we have? Daily Market Mastery. Yeah, I'm having too many live streams. So with me, Christian Rauchenwald. As always, we're going to use this episode to try to forecast where the markets or certain stocks are going to move in the future, to this way find proper opportunities to invest our portfolio in. Now, unfortunately, I just got back from shopping, so I still need a couple seconds to finish setting everything up. In the meantime, don't forget that the usual disclaimer, everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. That said, as you may know or may not know, I'm a popular investor on eToro, and you can check out my personal track record by using the link that's pinned in the chat, or actually gonna move that a little bit, 1 second. So, so yeah, pinned in the chat or in the video description down below. Okay, now so far I'm getting there, so I just need a few more things that I need to open here before we jump into it. TradingView, investing.com, obviously eToro, so we can check out portfolio performance and so on, blah, blah, blah. Log in here, start this, yeah, and with that, we're good to go. More precise, today we have episode number 26, and as said, as always, we use Elliott Wave Theory or the Elliott Wave Principle, and you can use the link in the video description down below to either read this book online for free, so you don't have to pay a cent, or to order a physical copy. And you'll also find, as I usually mention, our one-page cheat sheet, which is one of the most useful pieces of paper that I ever found on the internet for Elliott Wave Theory, because it contains all the wave patterns. If you're curious to learn more about Elliott Wave Theory other than reading the book, you can also check out episode number 1 of Daily Market Mastery. There I'm covering some of the basics. The episode is there for a little longer, and since then we've pretty much in every episode either looked at a specific stock or index, or provided a portfolio summary. Now, yeah, almost ready. Just need a few more mouse clicks. So first of all, here we go. And then here we go, and economic calendar, and then we can actually already jump directly to my screen. And yeah, get rid of that message here. And yeah, so this is my personal track record. As you can see, 2-year return 62%. This year we are so far a little bit behind, so with minus 17%. If we don't need to go there, I can actually just go here. If you look at the long-term history, you can see that I've beaten, that I beat the markets the last 3 years quite substantially, and that I plan to do so in the future as well. However, right now we have a little bit of recovery in the markets before what we will have, in my opinion, will be like a bigger crash. That still should happen this year if we are not unfortunate, and then bring us the great returns that we're hoping for this year as well. Yeah, honestly, didn't expect the markets to recover that far, which is the reason why we have this minus 17% here. For now, our portfolio right now looks like this. You can see that some of the positions we have are currently in the red, especially our investments against the SPX and the NDX, so Nasdaq and Standard & Poor's 500. However, I said expecting that those turn around, especially the Nasdaq has been cruel to us, to be honest, but we'll see how that goes. And yeah, now that said, in yesterday's episode number 25, we were looking at, we can already jump to July, we were looking at we looked at Morgan Stanley. So if you're curious about that, next thing would be then Goldman Sachs Group on the earnings calendar in July. And yeah, hi Akashi, hope you're having a great day so far. And yeah, so Goldman Sachs Group is the next thing on the docket. So the first thing we'll do is we add it in TradingView, which we use to Goldman Sachs Group in NYSE. Yep, there we go, which we use to make sure that we have all the data. So the history here should for us start in 99. And one thing to note here is that the low that we have in 99 of 55.19 is higher than what we have here in 2008. So we would label it starting from 2008. And new chart and search for, and we said Goldman Sachs, search NYSE, there we go. So blah, blah, blah. And let's start with a monthly chart. Yep. And then get rid of the volume indicator first. I really have to find the time to look up the settings to get rid of that permanently. And yeah, so yeah, here we have some data issues, I would guess. Let's just check and make sure that our 2008, which should be this one. Yeah, November 1, 2008, low 47.41. 47.41, and here the low was actually 47.41. So our data from here forward seems to be correct, even if we have a glitch in the older data. So that's not such a big issue for us. Now, just let's see if we can get that here to look a little bit nicer, which means we would start labeling it from here. And yeah, I'm not sure if that checks out like this. I would be tempted to say that actually this here would be wave 1, 2. Let's just remove that whole thing for now and manually label it and see how that turns out. So I would say that from 2008, this here is 1, 2, and which means we would currently be in wave 3, 4, and 5. And to confirm that, obviously we can take Fibonacci retracement, see how much we retrace here for wave 2. If it's 61.8 or anywhere, yeah, it's pretty much almost exactly hitting the 61.8, which is perfect window for that. If we zoom in a little closer, then we can also roughly guesstimate that this here is 1, 2, and then potentially 3, 4, 5, so that this actually checks out as a wave 1. This here could be A, B, C in some form or another as wave 2, which would give us a so-called base channel that's quite steep, to be honest. So if we switch in from here to arithmetic view, it looks a little bit better. And general, and give us a trend channel, so we can check, okay, that would be our base channel from parallel 2.1, which would indicate that now we actually were in the third wave. Yeah, a few things we can do here. We can first of all add a Fibonacci extension to our wave 1 and to see where did we actually hit. So we hit the 261.8, which would be a reasonable turnaround point. So again, certain things are not, or certain things with Elliott Wave Theory, like the ratio analysis, is something that I'm still working on myself, so where I'm not like a master yet. But the usual targets would be 138.2, 161.8, 261.8, 361.8, and so on. And we really almost on spot hit the 261.8 here before we start to turn around. We also have a breakout from the base channel, which indicates very often that we're in third wave territory using Kennedy channeling technique. And then after that, very often wave 4 retraces to the top or the median of that base channel, which also happens to be perfectly the case here, which then would, if we add a regular, in this case, so that's called the base channel, then we would have the so-called acceleration channel, which is 0.1 with whatever high we have here with a parallel through 0.2 and a breakout to the bottom would indicate that we're in fourth wave territory. Now here it's like already hitting the median, so indicating that we potentially already finished that fourth wave, which we can also, there is then, so once we have that breakout to the bottom, here it's not a confirmed breakout, we would have to look closer and to see if we have a breakout and a retesting and so on. But we can also then move on with our so-called deceleration, not channel, but trend line, where we take 0.3, and then the next high point that we have, which is a little bit hard to spot. Okay, let's zoom in to make that easier, which would be this one. And then we extend that, and when we have a breakout from here, that would confirm that we're now in fifth wave territory, making it likely that this is, not this, close that, undo, not this, but I want to have that 0.4, that this here, what's the low here? The low here is 278.50 and 277, so that one is actually potentially our wave 4, which means we're now waiting for wave 5, which means we actually have an investment opportunity here. And yeah, Akashi says, my day is a disaster, lost my secondary phone, which had my primary SIM, have to get the SIM out now. You mean the phone broke or you lost it? Withdrew my whole fund, which is one from a shady Forex platform, didn't come to account yet. Didn't you already try to withdraw $49 from the Forex platform? So like, and I thought that payout worked out. Anyway, while we're waiting for answers, so we're going to add another channel, which is called the destination channel, by taking our 0.2, our 0.4, which is this one here, with a parallel through our 0.3 and extending it. Now we're going to get rid of the other channels for to make it easier to read. So now we have our so-called destination channel, which would give us a profit target, which is either the median or the top. Yeah, so we would potentially say, okay, here, that is going to be our goal somewhere on the top of the channel. We can also, in terms of ratio analysis, look something else, because depending on, so we take a retracement and we put it all the way where we would have our potential wave 5. because they're like, yeah. So like we saw in yesterday's episode, we covered a little bit deeper. First of all, wave 5 will recover at least, what was it, at least 70% of wave 4. So we will at least go here, and which would then subdivide the wave pattern like this. So the wave 4, although it doesn't have to be the point wave 4, it could be the entry of wave 4, the extreme of wave 4, and so on, would be the 38.2 retracement or the 61.8 retracement. If it's the 38.2 retracement for the bottom, then we would have a profit target of 417 roughly. But it can also be anywhere in between, which would then only increase our profit target. Now, considering that right now we have a value of what's right now closing 319, and our lowest profit target would actually be in that case roughly 400. So we have $100 or 25% profit target with our stop loss at 277. That seems like something that we actually can go for. So we could do things further. I mean, there are a few other options here. So another option would obviously be that this corrective pattern hasn't finished yet, which, yeah, like may or may not be the case. So wave 3 is usually the strongest, but it also would require that this here actually subdivides into another impulse wave. And yeah, like we cannot divide that into an impulse, because then yeah, in this case, it would actually be a leading diagonal. So, so it might indicate. It's tricky. So if we go based on the first labeling where we had our base channel, then we have a small breakout, then we trace to the median of that base channel, and then we have here our breakout indicating that we're in fifth wave. So using Kennedy channeling technique, oops, didn't want to delete that, wanted to delete that, we would actually be now in fifth wave territory. Yeah. Now, however, wave 3 is always the strongest, and wave 3 always subdivides into an impulse, which means within that wave 3, actually that here could be in some way 1, 2 or 1, 2. Can it be 1, 2? That actually would check out. So if I get rid of, if that wave 3 is not finished yet, so let's make that assumption for a second. So blah, 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 that's not finished yet, which means then that channel disappears. And then we would say, okay, this here is, yeah, so that's what I would expect. And we barely have a valid pattern. Wouldn't change much, to be honest. So we might label out two of those things. Yeah. So first of all, we're going to get another Fibonacci extension here for our 0, 1. So, and yeah, so we would have our profit target, or no, the profit target, not like this, but we would get our, or actually, let's keep that here for a second, undo. Okay, cannot undo the delete, got it. Redo, no, okay, undo, there we go. Wrong keyboard layout, yep, wrong keyboard layout, there we go. And now let's get another channel and make a destination channel for that smaller pattern. So again, we take 0.2 and 0.4 and parallel through 0.3, and we extend that. So our destination channel would actually be potentially somewhere on that line. Doesn't have to be up there. But a nice assumption would be that we actually hit this point here. So, I mean, obviously not in a week, not in a month, yeah, but that would be a potential pattern here. If we zoom, that doesn't scale very well. Okay, like if we make that longer and we zoom out, okay, that works kinda-ish. Let's make that longer. Okay, so we would have 1, 2, 3, 4, 5. For this here, wave 3 is the strongest, and that makes up actually wave 5, which would then also be the wave 3 that is the strongest here, which gives us a similar situation. So before we would have said, okay, that is 1, 2, and this here is wave, where do we have it? Base channel retracement. Similar, yeah. So we would have said 1, 2, 3, 4, but that would then be a leading diagonal because we have 130, and it cannot be a leading no, like that one can actually, we start from here, so 1, 2, but wave 3 has to subdivide as an impulse, so it cannot be ending here, it has to be this. And if we get rid of that retracement for a second, and just to confirm, so if that's our base channel here for that smaller degree, so 1, 2, parallel through 0.1, plus minus 0, so then we would have our breakout, we would have a retracement to the top of that base channel that would indicate that we are indeed finished our third wave, or that that would indicate we are in a third wave territory, and that one here would, as before, indicate that we have our fourth wave actually finished and are now in fifth wave territory. Now, if we are here in fifth wave territory, we can also assume that this here is 1, 2. So on a smaller scale, that might be then on a very small degree 1, 2, 3, but that would then need to be a leading or an ending diagonal. That might actually be an ending diagonal because wave 5 can be an impulse or an ending diagonal. So tools, Elliott wave, ending diagonal. If that is an ending diagonal, 3, 4, and then 0.5 is obviously not this 5 here, but would be somewhere. For that, we can again take a trend line. I know it gets a little bit cluttered here because we are looking on a monthly time frame here, which means we are really looking for a long term. But 0.5 would then potentially be somewhere here-ish. Obviously, could be further ahead. And then that would be an impulse. Oh, no, that wouldn't, huh? Okay, that would then, for example, be an impulse wave that makes up and gets us to, yeah, like actually not like this. What are you complaining? Wave 1 was decomposing in impulse or a leading diagonal, okay, but it's not wave 1. Yeah, no, I'm an idiot. Obviously, if this decomposes into an ending diagonal, then it actually has to already be, it actually has to be this part here, yeah. So all of this would need to be like that, yeah. So, and that's our, no, that's the wrong channel. That's this big destination channel, which would tell us we end up here. But then we have that smaller destination channel, that would be like this one. That would tell us that we end here, and overall, overall on the bigger one, we could also hit the medium, but we would have to recover at least 70% of that wave 4. So that's gonna be tricky, unless that's not 1, 2, 3, 4 yet, yeah. So if we get rid of that, either way, so in our original labeling, if we assume that the whole thing here would already be wave 1, and we are currently looking at wave 2, then taking a Fibonacci retracement from here. So if we would say this here is 1, 2, 3, 4, 5 in some way, then we would expect a 38.2 to maximum 61.8 retracement for wave 4. For wave 2, and then from there we go up for the next third wave, which would be a strong movement, yeah, which means we would have our stop loss potentially at 192 with our take profit above the all-time high, yeah, so that wouldn't be that bad. Now, if we look at it this way, the way we have it right now, which seems to make more sense to me, to be honest, then we would have our take profit still above the all-time high, and again, Fibonacci extension in this case, because then we would look at this part here, or actually we would look to have wave 4 to be the 38.2, so like this at least, or the, so 61.8 if we're looking as an extension, 38.2 if we're looking at retracement, or like this, which happens to, yeah, not perfectly. Can I drag that to the left? Yes, I can drag that to the left, yeah. So it doesn't perfectly align, but it would give us a profit target if I did my job roughly right, of around 549. So which means if we were to invest our usual roughly 1%, our stop loss would be at 277.84. So 277.84. Okay, which I cannot set properly right now because the markets are not open. Now, that's a bummer. I can only enter it in dollar amounts. So what would that be from now? 316. Let's check. So 316. Oh, no, not 316. Sorry. So the close was at 319. 319.81. 277.84. So like a 15% loss. 15%. So would be that. Okay, that would be roughly a 15% loss that we risk here, whereas our take profit would be 549.48. And what did we say is the current price? 319.81. So with a 71% or 72, 71. Okay, would be like that. Okay, that would be 71%. Okay, so we had 15 to 71. So 1-to-4 ratio here. Definitely okay. So I'm gonna open that position or set the order for the position. And yeah, then we're gonna just wait how that plays out. As said, our stop loss is reasonably close. Oh, didn't want to close the tab. 1 second, just have to keep notes. So we have today the 25th of May. We have episode number, what did we say, 26. And yeah, and that's basically fifth wave till $5.50 roughly. And now if we circle here and as said, Goldman Sachs, and what's the analyst's prediction in comparison? So there, all analysts would agree for an increase to 400. Top analysts would agree for an agreed on average, say 413, 400, 385. We're at 319. So for a change, I'm actually aligning with what analysts say, although my profit target would be a little bit higher, yeah, as we can see here. Yeah, we'll see how that goes. To be fair, another option how this could turn out is that actually the pattern here is different, and this is a corrective pattern that I cannot label right now because I can. So that actually, yeah, doesn't let me label it like this. So, but that actually is A, B, C, in which case, if we take this, and then wave C would be like this, and we would reach a low of 240. Yeah. So which means if we are wrong and we hit our stop loss here, in which case our risk was as said 17% or 15% of the roughly 1% that we invest, then we would hit our stop loss here at 277, and potentially then once we hit the 240 area would then relabel and consider re-entry. Yeah. So where then after that we should see that wave pattern. Yeah, that's pretty much it. Now let's check. Akashi says wanted to withdraw $90 from Stormy and got stuck because they sent a verification code to my number, which I lost today. Oh, yeah, like that's really a bad day to have. Yeah, like I mean, sucks, but you know, that's one of the things I like about, I mean, I'm sure there's also a solution for that for Android, but what I like about Apple and iOS, because I have the Messengers app on the phone and also on the MacBook, which means text messages, even if I turn off my phone or so, as far as I understand it, they should also still show up, or probably if the phone is turned off, then maybe not, yeah. But overall, they get synchronized between devices, so, but it sucks, yeah, if you yeah, lost your phone. So again, like, I'm not sure if you mean you lost it, like it's gone, or you lost it, it's broken, and you would need to get a new phone. Either way sucks, yeah, but will not be the end of the world. I'm sure it will work out given some time. Yeah, so that's pretty much it for today. So we've picked another decent, yeah, or not decent, but we found another opportunity. So Goldman Sachs stock analysis, just renaming the stream analysis. Yeah, so that there is a chance that people also find it, or Group Inc. Yeah, that also find it on YouTube later, and we'll see how that plays out. Now, obviously, most of our predictions, again, we're looking at a monthly chart here, so we that's not going to happen in, what do we have here now, like in whatever 2, 3, 4, 5 months, because even if it's like this, and this is 1, 2, 3, 4, 5, we need a couple months to play out those patterns. So we're already looking towards the end of the year or early next year. And then, yeah, like, so we could obviously look on smaller scales and try to work out this pattern and trade on a smaller degree. But then we are looking at smaller profit targets, and I actually prefer the long-term investments because it also gives us the chance that when we are right, that we end up holding positions for more than a year, which gives then, at least for me in Germany, that means like no or lower taxes on the positions, which means more profit on our winning trades. And if we hit our stop loss, well, then anyway, it's a losing trade. Yeah. And yep, that's it for today. There's no point, like it's like 5 minutes left to have half an hour full, and there's no point in looking into another stock in 5 minutes. So there will not be an episode tomorrow, as usually we don't have streams or daily market mastery streams on Friday. And as mentioned in my other stream, Irina and I are spending the weekend in the Netherlands, so and we'll then be back probably Sunday evening from what I recall. And then the next stream will be on Monday. And Monday we'll have our usual portfolio review, which means we will go through all the things that we labeled and see how they developed, where we were right, where we were wrong, where we need adjustments, where we may take profits early if there are. I mean, right now, obviously, where's portfolio? Portfolio there. So right now we could look at Domo and Neo to consider taking profits. Neo was already more profitable, but they had a really bad day yesterday. Our SPX, SQQQ, they actually SQQQ, so the NDX basically had ridiculous aftermarket movement while it was, let's check real quick on my watch list. So while it was falling a little bit yesterday, so it closed lower, or it opened lower and then recovered a little bit. If we zoom in, so it opened lower and then recovered a little bit. It actually then in the aftermarket recovered more than it lost. So it's basically right now somewhere here, which is going to hit our portfolio once the market opens quite substantially, unless that changes until the market opens. I mean, quite substantially, but a little bit. So today might be a losing day. And then we'll see. So far, we're still in the green for May, but depending on how today turns out, that might change. And then May is already towards an end. It's been a running pattern for the last 3 months or so that during the month, we're actually performing decently well. And then towards the end of the month, the NDX and the SPX suddenly like gain some speed. Curious how it will turn out, because obviously early June is when in the US the default may or may not happen, depending on if Republicans and Democrats can agree on something, and or if the president invokes the 14th Amendment and how that turns out. But I believe that if he has to invoke the 14th Amendment, it might still cause a lot of insecurity in the markets and therefore a drop. But we'll have to wait and see. To be fair, considering my overall prediction, so like finishing that up real quick, that the markets are going to drop, and usually wave 3 would be the strongest wave. Doesn't mean that there will be an instant huge drop, but kind of like a US default would actually play very well into those cards. I know it would be hoping for like an economic crisis, not just in the US, but that then swaps across the globe. But for my portfolio, or for our portfolio, it would actually be quite good. Yeah, so we'll have to see how it plays out. Anyway, that's it for now. As for other streams, like since we're not at home the next couple of days and have to get up very early to catch our flights, there will be no Twitch stream today. And next week, I'm not sure yet about Twitch, but then in 8 days from now, Diablo 4 is actually finally launching. So which means there will definitely be a regular or some more regular Twitch streams again, because I really am looking forward to spending some quality time playing Diablo in the evenings. But that's pretty much it. So Akashi, thanks for tuning in. Anyone that lurked, also thanks for stopping by. I hope you all have a great day and a great weekend ahead, and then see you all in some other video or live stream in the near future. Till then, guys.